Hello, Uncle Jim here. One of the greatest ways to make passive income is selling options, and one of the most important parts of selling options is how to roll options. I've been rolling options for many years. I've rolled calls, puts, vertical put credit spreads, cash secured puts, iron condors. And in today's video, I'm actually going to share with you how I make the decision to roll, how far out I'll go, what strike prices I'll choose. Very important parts of rolling. So stay tuned. I think you're really going to enjoy what I have for you today. Okay, now we've been in a downward trending market for most of August. I think that's going to continue for September. A lot of earnings has been mixed. If companies have bad earnings, they've been clobbered. I also believe the downgrades with the different banks has had an impact. And I think it's kind of overblown. I do think there's a lot of fear out there, especially in relation to the banks. But if you had to kind of paint a better picture or something that was a positive of these negative bank reporting or, the downgrade by Moody's and some of the others is the fact that I think the Fed is taking that into consideration. I'm not thinking they're going to do another increase in rates. I could be wrong, but maybe they have one more in October or something, but I don't even think that's going to happen. I think we're going to hold steady. I don't think rates are going to come down anytime soon. They may stay higher, elevated for a longer period of time. At least I think so. And because of that, I'm making decisions due to these higher rates. The fact that in some places you can get higher rates than others, it being that these rates may last a long time, then it's important to kind of take that into consideration. At one point, I thought they were going to end and maybe they'd start decreasing and we might get closer to 2 or 3%. But I think we're going to have 4, 5, 6% rates for a long time, maybe 4, 5, 10 years going forward. So at least that's my 2 cents. That's what I'm thinking. Now, what's important about that, especially in a downward trending market, is rolling, mainly because you're going to have positions, they're going to get in trouble, they're going to get in the money, and you need to understand what to do when you roll. At the end of this video, I am going to share my planning worksheet. I didn't have any positions expiring in the next 3 weeks, so I'm going to share all my in-the-money positions and how I'm dealing with them. So stay tuned to the very end, and we'll go into that in more detail. So some of what I talk about at the beginning of the video, we can go into a little bit more depth as I look at each position and what I plan to do with it. So what's core to start any of these thought processes when you do get in the money and you need to roll is do you still want to own the stock? Has something changed that makes you believe you really don't want to own it? Not just the decrease in price, because again, prices move up and down and sometimes they're not logical. So you kind of have to reflect back on why you purchased that stock or why you sold that put. Or sold that covered call, and has anything changed? Do you still like the company? I'll give it for instance, one company that I changed my mind on that I was real excited about initially was Big Lots, and now it's just kept going down and down and down. I'm going to take it as a loss against some of my other gains, but I no longer want to own it, so I'm making different decisions for it based on that fact. I'm willing to take more risk because I'm okay with seeing it get called away from me. And the reverse of that is Cisco. I want to continue to own Cisco. And even Intel, I've had issues with Intel. Intel's dropped considerably and they've cut their dividend, but I still kind of like Intel. So Intel isn't a clear picture. It dove majorly, but it's recovered some, and I see some good decisions they're making long term. Within a year or two, we'll see the benefit of those decisions. So it's really key to kind of look at, the company, look at what might have changed. I've seen a lot of companies cut dividends recently, and that may change your opinion, especially if you need dividends to live off of. So that's usually the first step. Identify if you want to continue to own that company. Of course, a decrease in price is always painful to all of us, and we'd always like to have, own it at a lower price, and, that way we have better returns long term. But it's really hard to time the market. It's nearly impossible. Selling puts will allow you to potentially pick up stocks at lower prices. So keep that in mind, because in a lot of cases, if you had bought these stocks originally when you sold the put, you're still doing better the fact that you sold the put. So you're still picking it up at a lower price than if you had just bought the stock at that time. And always keep that in your mind or under consideration. And also, how deep you are in the money will make it either a lot harder to roll. The deeper you're in the money, if you're $1 or $2, $3, and of course a lot depends on the price of the stock. If it's $100 stock, $1, $2, $3 in the money isn't a big deal. If it's a $10 stock and you're $3 in the money, then it's pretty significant. So the deeper you're in the money, the harder at times it will roll, or you'll be able to roll. But in a lot of cases, especially these companies that bring in a lot of premium and are fairly volatile, if you're just a couple dollars in the money, you can definitively roll typically, and that's what I found. You could go a little further out to be able to maybe lower the strike too and still bring in some good premium. But definitely the deeper you're in the money, the more difficult it is to roll. So keep that in mind. And sometimes if it's really, really deep in the money, and I had this with Schwab, I think earlier this year, can't remember if it was June or July, but it was so deep in the money when the banking crisis came out. And I knew I want to own it anyway, so I just let it get assigned. And since then, it's recovered some. But what I did in that instance is I had two contracts. So I kept 100 shares. I put 100 shares to someone else, and then I sold the other put. And I believe if Schwab gets into the high 60s, I'm profitable again. I project it'll probably get into the 70s potentially next year. It was up in the mid 80s at one point. So that's just another example. And then always remember that rolling is just closing your current position and opening a new one. So people like to make it so complex, and you think, well, rolling, and then all these terminologies, but it's always calls and puts, and it's always opening and closing. It's typically as simple as that. So in a way, you're closing your existing position. So, and then just opening a new one. And what you're trying to do is bring in enough credit or money to cover the closing of the existing position. Now, if it's out of the money or near the money, typically it's real easy to bring in enough. Of course, like I said a second ago, the deeper you're in the money, the more difficult it is to, bring enough funds in to cover the cost of closing those positions. And you don't always have to do it at the same time. You can close a position and then open another one 3-4 weeks later, and I've done that. I've had other instances where, I may have closed one of the legs if it's an iron condor and kept the other legs open. So you have a lot more choices than most people realize. And again, when you go back to the basics, puts, calls, open and close, open and close. If you keep it simple, then you know what your situation is. It makes it a little bit easier to make a decision. Now, one thing I've tried, and I haven't been able to do it, but I've seen other YouTubers talking about it, is potentially rolling to a different stock or an ETF. And again, since you're rolling, you're just closing your current position and opening a new one. Why not close your existing position and open a new one in a stock that now you want to own? And again, that goes back to the decision. If you no longer want that stock or ETF, then you might want to, look at something else. Maybe instead of rolling Intel out, maybe you want to close Intel and open up Cisco, and use those funds from a new position in Cisco to close your current position in Intel. Just for instance, not that I'm looking at doing anything like that, but I've looked at doing it with other stocks, or even rolling from a stock to an ETF, like something like SCHD or one of the other really favorable dividend-paying ETFs. And then the last thing I wanted to talk about before I jump into the planning worksheet and go into my positions that are currently in the money is the fact that everyone gets fearful when you see potentially that you're in the money, and they feel like, oh man, I could be assigned at any moment. And that is true. You could be assigned at any moment, but the probability of that happening is really, really low. Now, if you're right at expiration and you cross expiration and you're in the money, it's going to be assigned to you or from you. And typically, I'd say 95% of the time, it's not going to be assigned early. The only times it's been assigned early for me are on ex-dividend dates, and it's usually because I failed to keep track of the ex-dividend date. And this is especially true with covered calls, that an ex-dividend date will occur. And if you're not familiar with an ex-dividend date, it's just giving the person who has the stock on the ex-dividend date is, and I think it's the day before, so you'd have to sell, you'd have to have the stock the day before the ex-dividend date, but it relates to being able to get the dividend. So if you own the stock on the ex-dividend date, then you are entitled to that dividend. So sometimes people will do an early assignment because they also want that dividend, and especially if it's again the scenario of the deeper in the money, the more likely that would happen. So keep track of ex-dividend dates. And the other is if the market takes a big dive and there's a lot of margin calls, and this happened a lot in October and probably back when the market dove so much in 2020, that what happens is people get in trouble and they get margin calls and they have to put stocks to you in order to pick up those funds or have enough funds to deal with any shortcomings in their accounts. I actually called Schwab and asked them about some early assignments I had last October, and that's what they told me, and that was happening a lot. So that's another reason to keep track of your account. Don't take too much risk so you don't get into one of those situations where you have no choice but to either liquidate securities or go ahead and have a position assigned that may actually become better down the road, or you may end up being more profitable down the road. So you don't really want to give it up because you feel like, either stock will go higher or lower. So that's primarily what I wanted to talk about. This next part of the video, again, I'll go into my planning worksheet, which lists all my stocks, or not stocks, but positions in the money. I think I have 9 or 10, and I have 66 active positions. And it's pretty evenly spread. I have, I think, 3 or 4 covered calls and 3 or 4 vertical put credit spreads, and I think 1 cash secured put mixed in there. So stay tuned for this next part. And as always, please subscribe, hit that like button. If you want to learn about my memberships, details are always in the description. So take a look in the description. My memberships have been growing nicely. Having some really good discussions. And if you do the higher part of the membership, you actually get a weekly meeting with me. And it's 15 minutes is what I show on the membership, but it usually goes much longer. A lot of discussions about what people want to do. People will share with me their specific portfolio or the stocks they're looking at, or thoughts about how they want to trade or not trade. And I also have a Discord for that higher level where people share trades and things they're trying. And some people who are really adept at, back testing, who will back test some of the other type of trades that some of the other members are talking about. So I encourage you to take a look. It might be worth your time. So that being said, let's jump into the next part of the video. Okay, now I've opened this week's planning worksheet. This is what I released my membership on Sunday, and I typically either Sunday morning or Sunday afternoon I release this. And it typically at the top, these are my top stock picks. This is what I shared with my membership. These are stocks I'm looking at. I kind of researched over the weekend that are special interest to me, that I'm not necessarily going to make a trade in them, but I'm keeping an eye on them. One was CVS. It came down big time, I believe, last week, mainly because of an announcement that they were losing some of their business to Amazon related to prescriptions, and they got hit really hard for it. I do think it's a little bit overblown, but it is at a very cheap price. I mean, 57.50 is below its 52-week low, or right at its 52-week low. So it's, in my mind, a good investment. And I provide the current price, the short strike, the outer strike, expiration, delta, what kind of premium, why I like the company. And I did that with Tesla. The only reason I'm looking at Tesla now is it's getting to a point where I'm beginning to really like it. I really like it in the low hundreds, like 140, 150, but I start looking at it if it gets anywhere near, where I can make some pretty good premium at around 170, 160. And the premium was really good when I looked at it over the weekend. I think it's come back from 215. But I looked at a 1020 with 170, 160 expiration and strike prices with a 12 delta. And it was bringing in $128, which is really good. It's one of the higher premiums I've seen. So I keep an eye on it. Again, I like Tesla at lower prices. And then eBay, I've currently owned some eBay. Again, I like it because the price has come down so much. 37.50 it's paying a fairly okay dividend. I think at 37.50 it may be like 2.5 to almost 3% in a dividend. And they're increasing the dividend quite a bit. They're kind of like Cisco turning into a dividend company. So this was a 37.27.50 for the outer strike the put you purchase, and then for an expiration of 119.24, which is a little less than 6 months away. I think it's like 5 months. 20 delta, so a little bit higher, mainly because the strike price would be so low. The next strike price I think was 35, and it was like a 11 delta or something. It was kind of too low. And then 91 was what the premium looked like. And again, I like eBay. I use eBay. So it's something I kind of keep on my watch list. And then Qualcomm, I currently do not own any Qualcomm, but I do have some trades that are open, and it's come down back into around the 110 range. So I looked at a 95.85 for the puts. Strike prices expiring on 11/17 with a 17, almost an 18 delta, and it just like Tesla had some pretty good premium. So it's something else that I was keeping an eye on, either for rolling purposes or maybe even to pick up some new positions. I've talked about in other videos that sometimes having too many stocks that you're looking at or diversifying too much for selling options can be a bad thing. If you find some good companies and you have been selling options on them for a while and you've been looking into them, you almost find like a Goldilocks area, an area that you can do pretty well. So why go on to something else that, where maybe you need to learn all that again. So I actually encourage a little less diversification. Stick with companies really learn about them and get a feel for where that area is where you can do really well with them. So that's my favorite top picks at the very top. Next, these are all my different trades that are currently in the money, and you can see some of them I've already worked with. So the first one is PayPal. Now, PayPal got hit hard earlier. I think it was early last week. They actually had an okay earnings, but I think this is related to the banking sector. I do believe the banking sector has impacted both PayPal and Block or Square. And it dropped, both these companies dropped, I think almost 10-20% in a couple of days. So it's in the money. Currently, it's not deep in the money. The current short strike is 62.50. The outer strike is 52.50. It's expiring on 10/20/23. I think it's come up a little bit, maybe as high as 61, between 60 and 61. I think it was up yesterday and down today. So, here, this is for instance, should I be scared that it's going to be assigned early? No, I'm really not. I'm not too worried about it. I've got till 10/20. I check it probably once a week to see, hey, can I roll this and do okay with it? So I'll plug it into the system and look at the trading page and see, can I roll it and make some money, or, can I lower the strike price? But again, with it expiring on 10/20, I've got plenty of time. I don't expect them to be assigned away from me. The probability is really low. And again, going into it, I'm perfectly fine with owning PayPal at 62.50. I like the company. I think they are set nicely to grow rapidly. So in a sense, I'm not too worried about it. And it's because nothing's changed with the company. I haven't been able to find anything other than the banking stuff and the fear factor or fear mongering that's impacting its price. So I'm staying with it. I'm going to continue to look at it. And if it gets assigned to me, I'll start selling covered calls on it. So I know that's not a real technical analysis, but again, it's not deep in the money. It's a couple dollars in the money, but it has lots of premium. So when I do look to roll, I do find a lot of premium with being able to roll. And the farther I go out, like I could go out 6 months, June of next year, and roll it probably down to 60 and still pick up some good premium. But as I get closer to that 1020, that should improve again with theta, which is another Greek, and it's just related to the time value of money for that stock, meaning how much it's the time basis is going down on a daily basis. So the higher the theta, the more you've got some value left in that option just because of it being 2 months out for expiration. So another thing to keep in mind. So next is Devon, and I actually rolled this yesterday, and it's 50-40. I rolled it to the same strikes. It was expiring 9/15, but it was still fairly profitable. I think I had a profit with it, but I decided to roll it out a bit. I rolled it to 119.24. I kept the same strikes. Again, because I like Devon Energy. I think long term they're a great investment. So I don't necessarily see, being fearful of getting out of them. If they're just like with PayPal, if they're assigned to me, I'll just start selling covered calls with them. And I wanted the premium. I picked up $553. This is for 4 contracts. And they were originally 2 different positions, and I ended up rolling them to the same month, and so now I'm dealing with the 4 contracts, and this is the most contracts I've had in any security, and I currently don't own any Devon, so I've been trading them for over a year, and I've never been assigned, and they went down a little bit today. I think they're like 49.30, so they're barely in the money. And if they went up to the mid 50s, which they could do, this would become very profitable. But bringing in $553, which equates to almost a 40% return, is pretty good. And here you can see that's the required capital or margin or cash that you need, and that's literally the $4,000 for the 4 contracts that are $1,000 spreads minus this $553.60. So, and then Square, just like PayPal, it's been hit hard again. I believe related to the banking. It also isn't going to expire till 10/20, so I have a little bit of time. This is because it's the deeper orange. I just wanted to note that it's the deepest in the money. I believe it's up some today, but 65.55. At the time, it was 57.05. I believe it may be a little bit below that currently. And my plan for it is the same thing as PayPal. I'm going to keep an eye on it. I'm going to keep testing to see if I can roll it. Like PayPal, I think Square is a great company. I think their Cash App is good. I like their tools or their enterprise solution for small business. There's a lot of, specialty shops that are using them, restaurants that are using them. They have a one package that combines the credit card processing and pretty much everything you need to run a small business, which I really like. I actually helped some small businesses set that up. So again, I'm not too worried about them. The chance of them being assigned early is really small. So I'm going to keep looking at them. Like PayPal, I'll plug them in and see if I can potentially roll them at different times. Now, because of them being, hit so hard recently, and they're both PayPal and Square are near the 52-week lows, I actually opened up 2 more positions with both of them much lower. I think PayPal, I've got a short put that's like 55, and my Square other contract is like 47.50. So it's still out of the money. So even though I've got two contracts, I decided to do two more on both those, both PayPal and Square. So again, the whole point of diversification. I like these two companies. They also have good premium. You can find a lot of expirations, and it's easier to trade with them. Now this is Con Edison ED, and I've had this for almost as long as Coca-Cola. I'm probably going back 10 years, so my cost basis is really, really low. So the strike is 85, so it's almost $5 in the money. And the interesting thing about this covered call, and it's a covered call, is it's been in the money. I think I've rolled it twice while it's been in the money. So it's been in the money for over 2 years, and it has never been assigned away from me. And now it's approaching back. It's getting near its strike price again of $85. And I looked this morning. I could roll it out to, I think, February of next year. It does have some weird expirations, but I could make a little bit more money. It wasn't enough to make it worth it. So I'm going to keep looking at this. The fact that it's never been assigned away from me and it's been in the money for so long, another indication that don't be too fearful when these specific positions are in the money. The probability of it being assigned away from you is really, really small. So that was a covered call. Another covered call, WBD, which is Warner Brothers. This was part of AT&T. They divested it and gave me some shares. Now, I only have one contract of it, but it's something I don't really want to keep. And it's been in the money the whole time, so I'm selling covered calls right at the money to bring in extra premium in the hope that it'll get called away. But just like I was saying with Con Edison, so far it has not been called away. So before the end of the year, because I want it, even though it's was divested by AT&T and I never paid for any of it, it still shows as a loss with the way they set the value. So I can take it as a loss against any of my profits or gains. So I plan to do that before the end of the year, probably November, December timeframe. So I'm not too worried about them. And again, it's another, for instance, of it's been in the money probably for the last 2 months as I've been selling covered calls near the money. This is Big Five. It's a sporting goods company. I do have two. This is my only cash secured put. It's been in the money a long time too. The strike is 10. So it's not a whole lot of money and I'm not too worried about it. It's currently 885. So this is one exception. I may not want to keep this. So if I can close it and get out of it, I probably will. Its numbers don't look as good. I think it's in retail and it's struggled a little bit. So it's not necessarily a stock that I want to own anymore. So I probably will take steps. I probably will, if I roll it, I may try to roll it again. It's currently in the money, but I may continue to roll it in the money in the hope of it being assigned away. It's been kind of surprising. The ones I want assigned away that I'm, selling options in the money or rolling in the money, it seems like they don't get assigned away. So just an FYI. So that's another company. If one again that probably the only one up here that I don't want to keep. I don't want to potentially own BGFV or Big Five sporting goods. Next is Cisco, and I like Cisco. This is a cover call. Just recently has been in the money. I have no plans on letting it get assigned away. It's currently just over 55, so it's barely in the money. What happens with Cisco a lot is it'll get into the money, then it'll have a little pullback. And it's been trading between I think 48 and, mid 50s for probably last year, maybe longer. But again, if I need to roll it, I can. It's so close to in the money. As I get close to this October 20th expiration, I should be able to roll it without any problem. Now, this is one I need to keep a track of the ex-dividend dates because it's a really good company. It's well managed. If I do have an expiration that's near that ex-dividend date, it could potentially get assigned away from me if it's still in the money. So, so I'm going to keep a little bit better tab of the ex-dividend dates for it. Next is Fidelity Financial. Now, this is an insurance company. I think they do a lot of title insurance. They've been hit hard with the fact that the housing, the housing market's been doing okay, but there haven't been a whole lot of sales. People are kind of locked into their low rates, and I think that's hurt them. But they've come back lately. Now, I wrote a $40 covered call, which I think is right at my cost basis, and it's currently in the money, barely in the money, 40.80. So I don't plan to get rid of them. The same scenario as Cisco, and they do pay a good dividend. I believe they're a dividend aristocrat. So I don't plan to let them go either. So I definitely, as I get closer to December, I may look at rolling them. I wouldn't be surprised though if they came back. I think they were down or came back below that strike price. They were down earlier today, so they may actually already be out of the money. So now I'm jumping into a few that IWM. This is just a new trade that I did this week. This was a vertical credit spread. I'll go over it since it's on this sheet. And I've really liked IWM. This is one of my only trades that I do related to just making money. Instead of using SPY, I like to use IWM mainly because it doesn't move as much. It's not as expensive. And the Russell 2000 it's been fairly steady. I think it's right now like 183, 184. So I'm not too worried about this one. I've done a lot of trades with IWM. None of them have been assigned. None of them, I don't think they've even been in the money. It's done quite well. So with this trade, I brought in 207.40 and I had a 36% return based on this required capital or required cash. So, and then I did roll Truist. This is also IWM. I forgot to enter that. And that was just today. Don't need to put that in, but I rolled Truist. This is one that was out of the money, but I found some really good premium yesterday, so I decided to roll it. I rolled it out to 119.24 from 915. And I picked up 280. I kept the same strikes. I found the 25.15 for Truist. It's almost like a Goldilocks area. It doesn't ever seem to get quite to 25. If it does, it just jumps back up. So I've done quite well in that range, and I'll probably continue to roll them. I do own 200 shares when I believe back in May when the banking stocks dropped so much. I did have 200 assigned to me that, so I do own some, and I wouldn't mind owning more. I think long-term banking is going to come back, especially if the rates start steadying. I think, they'll be up probably middle of next year. Schwab actually recovered quite a bit, and I think the regional banks will be okay as long as there's not too much commercial property or debts which are hard to get rid of because they're at such low rates. But we'll see. Again, I like Truist. I banked with them, and they've worked out well for me. This trade I just did today, this is an iron condor. I did 2 contracts. I picked 12 deltas on either side. So the 12 delta for the call side was 204, and then I bought the 214 call. And then on the put side, and I know this is looking probably a little weird, I did a 163 is the short, and then a 153 is the farther out put. Expiring on 11/17/23. It's currently at 184, so it's kind of right dead center in the middle. And I find the 12 delta works out quite well on both sides for the iron condor. And I brought in 247.80. This is the required capital. This is, I believe it's primarily the put side that Schwab looks at. I actually compared this to the total value. So before I made the trade, I looked at it, and then I looked at it after the trade, and that was the difference in what they're showing cash available for trading. And it turns out to be like a 60.73, almost a 61% return. So one of my better trades, and this is the second iron condor. I had one expire last Friday, and I'm expecting the same thing with this one. My guess is it will probably expire outside the money. I may try to roll it, but if it's a little more difficult to roll an iron condor, at least with Schwab. So if it's like it was last time, it'll probably just expire outside the money. It's very, very similar to the one that just expired. I think it's on the call side, that one was 207 and 217. This is 204 and 214. And the 204 is a little bit higher than its 52-week low, and the 163 is slightly above the 52-week low. I believe the 52-week low is 162.50. So that worked out quite well. And for the week, I'm so far ahead, and part of it is because of rolling Devon. But I've made 1209, and I still have one more trade I'll probably do tomorrow. And for the month, I'm right at 3,338. And so I have tomorrow and most of next week. So I should have a $4,000 month. So that's it. I hope you enjoyed that. I hope you have a little bit of a better understanding of rolling. If I missed something, please add a comment below. I try to answer all my comments. So thanks for joining me, and I hope you have a wonderful day.